Good morning, this is the latest market news. I'm Uliana. Asian stock markets were mostly high on Wednesday, with some major resource plays staging a recovery after a rebound in commodity prices overnight, while Japanese exporters advanced as the yen resumed its weakening trend. Regional stocks recovered after 2 days of volatile trading brought about by Monday's weaker-than-expected Chinese growth data and a sharp drop in the price of gold. Markets found some solace in economic data released in the US Tuesday, where both industrial production and new home starts exceeded expectations. The softer yen supported Japanese stocks with an Nikkei stock average up 0.9%. The weaker currency also helped exporters recoup some of the losses made earlier in the week. After rising 0.8% against the yen overnight, the US dollar continued to strengthen against the Japanese currency, a trend that was interrupted earlier this week by the risk-off stance taken by markets. The dollar was recently at 98.15 yens compared with 97.53 late Tuesday in Europe. The euro saw solid gains last night, pushing past last week's high despite some poor data releases, indicating that lows seen yesterday just below 1.3030 were significant enough to drive prices higher. On the data front, ZEW surveys in Europe came in lower than expected. Eurozone CPI was slightly higher, while the IMF lowered global growth forecasts. The euro opens this morning at near 2 months highs at 1.3185. The market will be eager to learn in today's update if the UK labour market was still leaning toward growth in March. Also, today's minutes from the Bank of England may tell us how policymakers are interpreting the central bank's new flexibility for managing monetary policy. UK labour market report 8:30 GMT. A widespread worry in Britain among the policy elite is that the 1-2 punch of rising inflation and sluggish growth continues to lurk. Analysts think that 3 months average jobless rate will remain at 7.8% and the claimant count will inch down for the 5th consecutive month, albeit just barely relative to recent standards. It was the latest market news provided by ICA FX. Goodbye.